Hello, everyone. Welcome back to the Prospero.Ai stock market live stream. I see we already have some questions and some people commenting in the chat. Good to see that going on. Welcome back, Saucepot Sassbox. I see your question. We'll be sure to get to it in the very beginning when George joins. If you are new here, welcome to the stream. If you're a longtime viewer, welcome back. Be sure to like the video. We've been trying to hit 20 likes. We haven't gotten there yet on YouTube recently. So let's try to get up to 20 likes today. As always, I'll take you guys through some of the topics that we are going to be covering today. We have a normal stream where we'll go through the topics and then we'll turn it over to the model portfolio update at the end. A lot of exciting topics. So to begin our show, we'll do our market update. The Dow hit 40K for the first time ever, a big accomplishment. A trend is going on across social media and the financial world where was the Dow Jones when you started your investing career? So I'll ask George about that, and we'll cover some of the things that are driving the market this week, like Nvidia earnings, which it seems all eyes are on. It's weighing heavily on the market and the market's direction once those earnings are out. I believe it's May 22nd after the market closes. So once those are out, it'll probably drive whether we finish the week positively or negatively, but we'll dive into those. And we'll also talk about, as the meme stock rally 2.0 comes to a close, we'll give some final thoughts, words of wisdom, what to think about if this ever happens again going forward, or if you got caught up in it this time around. And we'll just give our final note on the meme stocks because it seems like that rally's over. I believe GameStop is down again today. Next, we have Apple offering discounts in China. Seems like they're struggling to get demand for their iPhones in China as they're under increased competition from companies like Huawei. But we'll dive into what that means for Apple, their business going forward. We've covered probably in depth on this show about the tech innovation struggle that they have, but we'll talk about this story also. Next, we have Red Lobster filing for bankruptcy. I see we have 30 people in here. Let's see some comments right now. Had you ever gone to Red Lobster? If you haven't, looks like you may not get the opportunity. I'll give you some stats about their financial positions as they file for bankruptcy. It was in dire. Good to see Joseph in here. He was at Red Lobster. I saw that before they closed, they were purchasing 1 out of every 5 lobster tails in the USA. So I believe they're also the biggest seafood chain in America. So we're losing an American icon right now. Not really. I don't think I've ever gone there myself. Joseph was there back in the 80s. That was probably the glory days of Red Lobster. Endless Shrimp was the best. David had never been there. Reputation preceded them. Yeah. George in a Yankees jersey today. Yeah, I see.
I'm sad about the Knicks.
Yeah,
So
me too.
at least the Yankees are on a nice winning streak.
Yeah. My Mets are holding on by a thread, but yeah, the Knicks were disappointing.
I wouldn't have bet against Steve Cohen. I'm surprised. Maybe he's having trouble finding his angles.
It's funny you bring him up because we actually have a story about an exchange he's starting to that we're going to talk about later today. They're planning to do a 24-hour exchange. They're waiting on SEC approval, but we'll get into that and what that means for the market later on in our stream. And then to close, before we go into the model portfolio, we have 2 kind of macro things going on under the surface of the market. We have credit card defaults hitting an all-time high, and we have 41% of the Russell stocks, which are small cap stocks, having negative earnings, which is the highest since 2008. So, you always get it all with our streams. We'll give you the good and the bad, but we'll take everyone through all the topics today. Good to see. We have George in here now. Do we want to start with our normal market update? There's a trend going on, George. Dow hit 40K for the first time, and everybody was kind of sharing where the Dow was at when they started their financial career or journey. Do you remember where the Dow was at when you started?
I mean, I don't know. When I first started investing, that was like 30 years ago. No, like 20 something years ago. 25 years ago. Um, so yeah, I'd have to look that up, but I don't remember. I wasn't really following the macro when I first started dipping my toe into stocks when I was 13. But I'm trying to think. Yeah, I mean, the thing about like value investing where I started out is like you don't really look at that stuff a whole lot. The whole idea is that you're looking at stocks and set like stocks relative to other stocks in their sectors, looking at a lot of numbers. You kind of would consider a lot of the macro stuff to be noise. So I don't remember. But and I think I always cared. I don't think I ever cared about it. You know, the Dow was always kind of like stuffy companies. I think I always liked the S&P, even from the start, like the S&P 500 better than the Dow, and the QQQ obviously even better than that.
Yeah. So where I think we should start today is it was one of our biggest stories last week was obviously, actually last week at this time was probably the height of it, the meme stock rally 2.0. It all played out in under a week this time, which is crazy. But I wanted to seem since it looks like it's over, I wanted to ask you if you could give any like final thoughts, words of wisdom, maybe for anybody who got caught up in it this time, um, maybe how to think about this type of thing going forward from here.
Well, first of all, I would say it's still alive and well. Uh, there's like I think like GWAR and FFIE, and I mean I shouldn't be repeating these names really because I don't want to be giving anyone ideas. Um, yeah, you know, it's like it's one of the annoyances of this thing when like it gets excited. There's all these people that are like pushing these new like yeah, they're pushing these new stocks and they're just getting people to trade momentum so they can get out while other people are still filing in. Some of them institutions, some of them, you know, just people that don't know any better. Um, but yeah, I think that there's that what I learned from it is apparently that the Prospero signals can pick it up pretty well. Like you can look on our X, or you still see it a little bit in our time series graphs that like net option sentiment, even upside breakout for AMC, GME was out in front of it. And then we actually saw a big dip in upside breakout for GME, which is an interesting thing for these meme stock things. Apparently, like, and this is the best thing, I haven't seen it. I've seen it in small forms in other times, but it looks like a huge amount of long-term options were bought and swing traded because like when I kind of called the end of it, I mean, not so strongly. I said I would trade defensively, which is pretty much as strong as I get. Um, in terms of showing that there's a lot of risk. It was at 39 then, and we actually saw upside breakout move from 65 at close to 35 at open. So that kind of huge swing in upside is something that we don't see very frequently. So yeah, I would say it's pretty cool. Our signals picked it up well. I think if there's anything to learn, it's just that like, yeah, it's everything that we say. It's so hard to time these things. Like it's hard enough to invest when you say, hey, this is a good company with a lot of growth, it's profitable, even then you might time it right. Or there might be macro forces that get in the way. It's hard enough to do that. It is damn near impossible to look at a stock like FFIE that what I think has something like, I think it's some crazy like low revenue amount. I don't want to misquote, but it's very small. If any, I think maybe it only had 1/4 of revenue. Anyway, there's no basis for what the value of that company is. So it goes up, it goes down. You can't really make a clear argument of like, okay, do I still hold this for reasons other than I just think other people are going to buy it? And once you get into that level, then you're just at a huge disadvantage to robots because only not only on that like I need to know if other people are going to buy it question. Robots are reading like all like these hedge fund robots are reading all of social media simultaneously. So they have a much better clue on if people are fading, what they're thinking, and then obviously they have real market data. They have data from the brokers, like places like Robinhood are selling their order flows to them. So they've just got way better information on these momentum trades. And you might say, hey, George, don't they always have better information? It's like, yeah, they always have better information, but at least when they have better information, all the same trading, social media, at least when they have those advantages, like it's not just that. At the end of the day, you can do well as an investor if you understand patterns well, if you understand like what company is going to grow long term. Almost always, if you get a company that's just like good and you buy it, yeah, there's some fluctuations, and that's the basis of value investing. If you hold it, it'll be a good long-term investment. But when there's nothing real to the company and it's just getting overhyped, then you just have no idea when it starts going down quickly, which it always does, if it's the end or it's a correction, or if you're just going to tell yourself it's a correction because you're in this echo chamber of other people who sold you on it, who are just going to say, no, it's not over, it's going back up.
Yeah, it seems like we see it time and time again. We are going to get into NVIDIA earnings shortly, but I do want to cover this question that was actually asked before you joined the stream, so we don't forget. So it's from Saucepot. She or he was asking, do you think there are any scenarios that may cause Alphabet's stock price to drop in the near future?
Any scenarios. I mean, yeah, there's a real obvious one. Like there's all these rumblings of Microsoft taking search and blah blah blah, and like I'll believe it when I see it, but it's not a non-zero risk. Like there is some cool search technologies that they're working on, but at the end of the day, it's just like it's so embedded in the Google. Like everybody's just like so embedded in Google search. And like, yeah, they could switch, but I feel like it would be a slow switch. But oh, my Google Home thought I was talking to it. Um, but yeah, I think that's the big kind of like existential threat. Then I also just think there's the ad business. If this consumer spending thing ramps up, and there's real worries that there's worries around that. So yeah, I mean, we like Google. We added it this weekend. Like I do think there's a lot of upside relative to the value. But there, any business, there's going to be some threats to it.
Yes, but it sounds like the risk reward is still good in your eyes.
Yeah, I mean, for this week, I liked
Hmm.
where net option sentiment was. Like we're very quick to switch to alternatives based on how things are priced, where the option sentiment is. Like, it's definitely a stock that like I say, if you want to just like a port of the simplest portfolio to hold for 10 years, it's Google, Amazon, Microsoft. Um, and I think it's really just that simple. Those cloud providers are just in way better position than anyone else to grow long term, including Nvidia, in my opinion. Although I wouldn't really bet against Nvidia, I just think the risk reward is safer on the cloud providers. There's more risk and there's more return in Nvidia, more potential. But yeah, I mean, there's always threats to businesses. Like if you don't look at a business and see some, I mean, other than Amazon, that's just like, they got one of the biggest moats that I've ever seen. So that's the caveat. Um, Other than Amazon, I think you could name some decent threats to any business, and probably copious amounts of them.
Hmm. Yeah, so the one company that you mentioned, which is off your list of 10-year buy and hold, or at least doesn't make the top three, NVIDIA, they have earnings this week. It was featured in the newsletter that you sent out yesterday, how it's a very binary event for the market. Whether we end the week positively or negatively, probably heavily weighs on their earnings. So if you want to, dive into them, how you're thinking about them, but also I wanted to pose to you, so we've seen Nvidia just post tremendous growth numbers for, I think we're either this earnings this quarter is either lapping the start of it or it may start next quarter. So as we start to lap the insane numbers that they have reported, do you think it's going to be tougher for them to have like insane earnings that blow the market away over the coming year?
Well, it's all about, and I think especially for where we are, it's all about expectations. And I think what I zeroed in my letter to give people the cliff notes is I think it's about guidance. if you see numbers leak and you see them beat on revenue and profitability, don't be so quick to like load up. Just because I absolutely do think that that how they guide is going to be the most important, because like, yeah, they can't keep up the torrid pace forever. I mean, when you're growing at over 200%, it's really hard to be like, okay, I could grow another 200%. That's kind of insane. So I don't think anyone's expecting them to keep it up, although I haven't dug that deep into the consensus forecasts, etc. um but yeah, I think that it's going to be all about guidance. And if they guide up, I think that'll do well for them and the whole market, because there's so many other, like, the cloud providers will do well. I think there'll be like a lot of like tech adjacent companies that'll do well, because it just shows that, we talk about like cybersecurity. If you're talking about tech adjacent, right? If computing is expanding, if more people are ordering more chips, if that demand's going up, obviously there's going to be more cybersecurity expenses, or perhaps new customers coming in that are scaling up their compute, that they need a more professional cybersecurity solution. So there's so much around this AI tech expansion ecosystem that I absolutely believe that whatever NVIDIA guides to, and if they guide up, because, basically the main point that was made in the newsletter is, it's just like, are we still ascending in this AI thing? And more importantly, ascending faster than maybe even the companies can recognize, right? If their own predictions are saying, oh, we don't even have a handle on this, then they end up, guiding above as more numbers come in. That means like demand is even still like higher than people expect and catching them off guard, which means we're still in an up curve, right? But if it's the opposite, if it's like, well, it's not really what we thought, we're seeing some concerns on like 1 year time horizons, then that's going to basically confirm, I think, the worry of a lot of people in the market, which is that AI tech might be overvalued now.
And I think in past NVIDIA earnings, you've played stocks like Broadcom, SMCI, kind of to get some exposure without being directly exposed. Could you see yourself doing that again this time, or are you going to wait for the earnings no matter what?
I will probably do that again, although we'll see what's going on with SMCI. I might even get out of SMCI today. I was pretty certain that um I was going to not have Nvidia through earnings, but its strength today relative to SMCI, I might find a way to talk myself into it. Um, we'll see. I don't know. Like, what I was planning to do was do SMCI and Taiwan Semi heading in, because I think Taiwan Semi is like, depending on what they say, like, if there's China concerns, then Taiwan Semi might, they might end up having, a good situation, because they might be, kind of needed more versus NVIDIA chips. So that's why I was going to play that, but we'll see. I might talk myself into playing NVIDIA earnings based on today's performance. And I just like, they just always do so well. And they keep on blowing it out of the water, but it's too hard to forget last quarter that they had that 231% quarter, and then they went down because of guidance concerns around China. Like, I can't get that out of my head, and that's probably what's going to ultimately prevent me from owning it into earnings.
Mhm. And before we move into the next topic, I see we have had over 200 people in the stream so far. So let me just send out, if you guys enjoy what we've covered so far and you enjoy the streams in general, please like the video. Thank you all for tuning in today. If you have any comments that you want, and concerns and questions that you want us to address, feel free to let us know in the chat. We're happy to cover anything. I see we do have a question from Jonathan. Thoughts on PDD, growth, profitability, and upside breakout look good?
Yeah, I added PDD this weekend. It's in the investing high conviction portfolio. Um, oh, interesting. Net option sentiment took a dive at open, but down to 72. Um, but I do like that upside profitability and growth, 75, 75. That's really good. It is reporting Oh, that's interesting. Upside breakout jumped up when net options went down. So perhaps people are shifting from shorter term options to longer term options. I mean, that's what it looks like. Yeah, and downside breakout shot down. So that looks like some pretty positive, I mean, at least in the long term options dynamics around it. I mean, now that I saw those increases, I'm probably not going to exit, but it also reports on Wednesday, and I'm not sure I'm going to hold it through earnings. I think that was just what I felt comfortable with to start the week, and I saw both of those reporting, and I was like, they might run a little bit on anticipation of earnings if we're in a if we are in the bull story that I think we are. Um, just an anticipation, people making bets. So yeah, I'll probably only hold both of those through Tuesday, but I'm waffling on Nvidia. But yeah, I like
Okay,
PDD.
so to stay in the Chinese market, but this time turning to Apple, who have now started their second round of discounts on iPhones in China this year. Um, Discounts are up to $318 on certain iPhone units. Earlier in February, the discount was only $159. So I don't know if there's anything to read into the discount being double currently. It seems like Apple is facing just ever rising competition in China. And what do we make of the discounts now being higher than earlier this year?
Yeah, I mean, is that something that's typical, the discounts?
I don't believe so. The article I was reading made it seem like it's not a common occurrence for them to do
Yeah.
that.
Yeah, I mean, it kind of just fits in with everything that we've been saying about Apple, where it's just like some of their moves just seem a little like reaching. Like we've said desperate, but this like I don't think discount is desperate. But it does. I mean, if you're a company that offers discounts on a quarterly or whatever basis, like that's fine. That's a strategy. But that's why I asked if it's typical. I don't remember it being that typical. But yeah, it does seem like Apple is kind of reaching into whatever business strategies they can, and in order to prop up declining sales. Um, but it's hard because traditionally how Apple does that is they make a new product, and that's what we all look for them. That's how we value the stock. So I'm actually surprised that people are still, like, plenty of people are still as bullish on Apple as they are. Um, just because I have these concerns on innovation, and some of these ideas are not like showing strength. Same kind of thing with the App Store fights. It's like it seems like they're not operating their business as they typically do. It seems like they're more operating their business on, trying to get more sales. And I think companies always do better, and this was kind of a strength and a core competency of Apple when the product does the talking, right? You don't worry about sales. You just put the product out. The product's so good, it's gonna sell itself. I mean, I do always like most companies have sales forces. So it is kind of funny, like that expression, like almost any company, the product doesn't sell itself, it still has sales forces. But ideally, you'd like your salespeople to have very easy jobs. Um, but yeah, I just think that, like, I see Apple in two ways. Like, either they figure out how to innovate again, which is possible, but it's like it's looking less and less likely, or they're kind of dying a slow death. Like, I don't think they're gonna be like not one of the top 10 market cap companies anytime soon. But that's what I mean by a slow death. In 20 years, could I absolutely see them as like not one of the main companies? Yeah, definitely. Definitely.
Especially, I've seen stories, and I think Sam Altman, the OpenAI founder CEO, was asked if he would ever build a phone, and he didn't like say no, not never. He kind of said he had thought about it before and possibly. Elon Musk has floated around starting his own phone before. If that were to happen, what do you think? Those companies kind of are on the leading edge of tech now and innovation. So, what would happen to Apple if that was actually announced and going to happen?
I don't think that's their bigger threat, to be honest. I think their bigger threat is not phones, right? Some kind of holographic interface, or yeah, obviously they're getting into VR, which is smart. Like, I think some alternate form of just holding a device in your hand, like glasses, like if they could actually figure that out. I think that's, especially if you think about where we are with LLMs and interactions, like I think obviously like Neuralink where you're just like communicating via your brain to something is a little like uncomfortable, like A, and B, I think far away. But I think we could easily get to a point where, voice commands are just so easy. You're just wearing something and you're like hearing your texts and you're sending them. I don't necessarily see a need to have a screen in the same way that we have one long term. So I would actually be surprised to see other places building devices, because like Sam Altman's a technologist, and like I think as a technologist, I would be kind of shocked to see him building with like an older technology versus a new one.
Yeah, so we'll keep our eyes on that going forward. Spinning to a story that I saw this morning. Unfortunately, I asked our chat, it was like 50-50 if they had been here before. Red Lobster has filed for bankruptcy. Their cash position at before this announcement was pretty dire. They had over 1 billion in debt and less than 30 million of cash on hand, kind of like where the USA debt to GDP may be going. No, just jokes. But you know, oh, also another stat is they had 5 CEOs since 2021. I think that's a pure sign of just disarray within the company. George, have you ever been to Red Lobster? Or what do you think of them going bankrupt?
Well, I mean, thinking about their debt to income ratio, it's kind of funny because it's kind of I feel like that's the kind of debt to income ratio that their customer base has as well. But like my parents didn't love seafood. My mom especially didn't like, bottom feeders. Like as I got older, I ate more on my own, but like yeah, I don't think she even wanted to eat nice seafood, let alone like a bargain basement thing. So, I mean, I definitely like remember passing a lot of Red Lobsters, like they were all over like the East Coast. And like being like, "Oh, like I'd like to maybe," but like I don't think that like not a lot of kids like seafood. I think maybe it was like more of like in middle school or like your teenage years. I don't know. Is that when you went?
I have actually. I don't remember ever going there. Maybe I was there as a kid, but like as a teenager, adult, never been there. But I do love seafood, so I should have tried it at least once. But I
I mean,
don't remember ever
yeah,
going there.
I love seafood. Who's been to Red Lobster on the stream?
I saw Jonathan and I believe Joseph both had said they'd
Oh,
been there before.
I mean,
Although
they were
Joseph said back in the 80s, so
wow. That's a really old school Red Lobster story. Um, but yeah, I mean, it's one of those things that I think it's kind of hard. I think the restaurants that are doing well are like the fast casual ones that are like in and out. Like I just don't I'm struggling to think of a restaurant chain that's like sit down that is doing well. Like, I think that it's just hard. I think if people are gonna like sit down, and I think part of that is like Uber Eats and like people ordering, right? I think either you want your stuff fast and like as cheap as possible, or you want to go to like a sit down place that's a little nicer than that. I think it might just be a little disjoint. Or even places that they have like a buffet, right? Red Lobster did.
I think so. I know we got one comment that their endless shrimp was the best. So I guess they had
Well, I
a
don't. I think endless shrimp was just like you could get like keep ordering the shrimp, but
refill.
I think you still had to
Mhm.
deal with a waiter. I don't know, like kind of like Olive Garden, I think, like with the breadsticks.
You make a good point about Uber Eats, and maybe we'll see more restaurant chains kind of become like ghost kitchens going forward, where they're not really a sit down place. They're just a kitchen, and you can just order it, and it's all like to go takeout. I wonder if that's a trend we'll start seeing happening. I know Mr. Beast, who is the biggest YouTuber, he had Beast Burger, which had no physical locations. It was all ghost kitchens. It'll be interesting to watch with the rise of
Beast
Uber
Burger,
Eats.
really?
Yeah, it might be a little bit. His demographic might be a little bit below your age, George. He probably didn't reach you. He's like Mr. Beast though, right?
I actually just from being on Spaces, I've heard people talk about him, but yeah.
Yeah. I think spinning from this or just ending this topic, I think people like when we give kind of like tier lists of companies. So I think I have a list of stocks that are restaurants right now. Maybe I'll read like 8 to 10 to you, and you'll give like maybe your top three or five. I know
Stocks
it's
that
not
are
gonna.
restaurants right now, are they not going to be restaurants later?
I don't know. Maybe if they don't make your top five,
Oh my
maybe.
God. I don't know if my
But
mom, I don't know if my mom's watching, but that is like such a Merle Kalis joke. I can't even like, I was like paying attention to my stocks and I wasn't even, it just like came out of my mouth.
um, I know you're not gonna have like how Prospero Signals like sees all these right now, so this isn't like a binding list. But I think it's just a fun exercise we can do.
If I
Um,
like any, I'll look at them in Prospero, obviously.
all right, so I'll just read you a bunch right now. So we have Cava, Chipotle, Domino's, McDonald's, Shake Shack, Wendy's, and Wingstop. That's seven.
Oh, I mean, we love Cava and Chipotle. Like those are both like I like those both I think are like good businesses as well as loved in Prospero. McDonald's goes back and forth. Domino's, I think that's or is it Pizza Hut? I've been shorting PZZA, whatever that. But like, yeah, I think like growth, like Domino's has been run better since they got their new CEO. I was about to call it gross pizza, and I was like, oh, it's less gross, and their ingredients definitely got a lot better. But yeah, like I'm overall worried about retail stocks, but still love Chipotle and Kava, both of those. And like I think Kava especially has a lot of room to run up because I think it's going to grow.
That's interesting that the two you like are kind of like the same business models, and they're kind of like twin stocks. I feel like they're just one's.
Yeah,
Yeah.
I think you're getting good not great ingredients at good not great prices. Like, but I think that's what people want. I think that's what the majority of people want these days. Because it's like Chipotle, if you eat a bunch of food, it's not necessarily healthy for you. But like there's like veggie portions and like Kava even more. There's like veggie portions. There's a lot of stuff. It's not like McDonald's where you're eating like literal garbage. And that's like
Hmm.
kind of the same for like Pizza Hut. What are the other ones you mentioned?
I think Wingstop, Shake Shack.
Oh, Shake Shack, I
Um,
love. Sorry, I missed that one. I love Shake Shack personally. That might be my favorite actual one. But it doesn't always do well.
PZZA was Papa John's, by the way, so we're short on
Oh,
Papa
yeah,
John's.
I do short that often. Shake Shack looks okay, but I love Shake Shack. What's the
All right.
Domino's thing?
If you're a viewer right now, comment which of those restaurants is your favorite, or if there's one we didn't mention, which you
I
like the
think it's
best.
GPZ. All of these are looking pretty. Yeah. Domino's looks pretty good in Prospero. But yeah, as I said, it's like I do consider it just like a hair under like Chipotle and Cava in terms of quality of the new. Wow, Domino's has got like an 83 profitability score. Domino's is not a bad stock. I mean, I don't love retail stocks. I'm shorting Wendy's right now, and that's going well. Um, but yeah, all of them actually look pretty decent. I'm surprised how good they looked.
Interesting. So our deep dive on fast food casual restaurants has resulted in some positive outlook in
Yeah, yeah,
Prospero.
maybe. I mean, if you're looking for if you have an appetite for them, they're surprisingly good in Prospero. Oh, I didn't
Hmm.
even realize that have an appetite.
But I'm bum. All right. Moving on. to Steve Cohen. Okay, so he is one of the people backing an exchange called the 24X National Exchange. They are seeking SEC approval to do 24-hour trading. Robinhood offers this in a limited fashion on certain stocks right now. I'm very curious if this is where we're going to be heading going forward, and if eventually 24-hour trading is going to become the standard for the stock market. Your thoughts on that?
Oh, I mean, I think we're definitely going in that direction, but sadly, we're going in that direction because it gives market makers more control. They're going to basically be deciding the prices in off hours, like, which is horrible, right? Because when you go to an exchange, it doesn't always happen, but at least there's like laws for this. Like, you're supposed to get like a best offer. And so it goes on exchanges, like, especially if you're a good broker, they're going to do a lot to make sure you get a best offer, like not Robinhood or Webull or any of those garbage brokers that like literally want the opposite for you. But anything that's running overnight, and especially like we're talking about two things I deeply distrust: Steve Cohen and things that and stock trading overnight. Like, they are going to be doing whatever they can to get the better of you, get you bad execution, which is the opposite of like best execution, but bad is a little more nebulous. Best execution is actually a term. Um, but since it won't be a live market, you'll basically be trading in siloed markets, and you might not be getting, the best price. You might be getting shown a price that's different than someone else is getting. An institution is getting shown a price or allowed it to transact at overnight. And it's the same thing. You just make it you make it even easier to do payment for order flow, because normal payment for order flow, right? You have um you have a market price, and you could see, like, if they transact at like $5, and you put in an order and the stock was at 450, you'd be like, what the fuck? But like, they can kind of do that overnight because there's not a real market price, and they could easily just say, like, well, this was our price. I don't think I don't think there's going to be some unified overnight price. There isn't one with Robinhood. And basically, what you're doing when you do that is you're basically giving Robinhood the opportunity to shop your market order when you put it in, and see if they can get someone in front of you, raise the price before you get execution. It's a really, really bad system that way. And I wouldn't be surprised if Steve Cohen thought up a system to shave even more dollars off of your trades than Robinhood did.
When you say there's not a real market price in overnight, is that because the volume isn't high enough to get one, or what is behind there not being like an agreed market price in the overnight trading?
Well, the exchanges aren't open, right? That's what I mean by lack of market price, right? Like, when you have a broker, like in a perfect world, a broker is supposed to bring your trade to an exchange, right? And get you best execution. That's how it's supposed to work. But if there's no exchange to bring you to, they're essentially just like picking whatever the fuck price they want. And yeah, there could be dynamics behind that, but the idea is that there's these exchanges that are live, they have to keep you somewhat honest, right? Because, like, of the example that I gave, they can't just like make up a price during the day, because you'll basically see what the price is on the exchange, or you can see it in another broker, et cetera, et cetera. But especially if there's not an exchange, right, or multiple exchanges running, and I don't think there's going to be any. I think these are just basically like exchanges that Robinhood runs, or like these other like corrupt places run. Um, then there's nothing to keep them honest. They could just like decide to charge you whatever, or charge people other prices. They have a whole night to like cover it up. They could even have it, kind of run up overnight, basically create a situation where they know they want a stock to go up, an institution wants a stock to go up, so they make it seem like it's running, only to rug pull before the market opens, and it was never supposed to run in the first place. There's all kinds of things that they can do um, to manipulate prices wherever they want them to go. That is just like when you have exchanges and you have different quotes coming in and competitive quotes, it's a lot harder to basically do whatever you want on prices.
So I guess I didn't understand the whole dynamic of like the exchange and broker relationship. So I was happy you explained that. When I was saying like this standard going forward, I was kind of thinking about the whole package in my head. So I guess like you don't think exchanges will be open ever 24 hours,
Um,
is what it sounds like.
Maybe some will. I doubt all of them will. I mean, I can't see like the New York Stock Exchange and like Nasdaq and like, because it's like it's one thing if it's Robinhood where they like literally don't give a shit and they're probably just having some computer system run overnight, right? But like Nasdaq or these or like the New York Stock Exchange, they want, if they're open, they want to be able to like offer services. They want to be able to make sure they're getting best execution, things like that. And yeah, that could be automated. I wouldn't rule it out, but I just don't think that like I don't think that they have much interest in. I mean, maybe I would never say never, but like there's a reason that they had the market hours in the first place. They've kept it. They did do extended hours. You might maybe see them doing like another extended hours. But, for example, the OCC, like the Options Clearing Corporation, like even as market extended hours, they're holding fast on their hours and they're not going to change. And so like gets very, that gets very weird because then you basically get a situation where of course, like a place like Robinhood would love this. If there's no options overnight and there's no official trades, they start to create their own kind of options market. And I'm not going to get into because it's what I would suggest that they did. What they would do is illegal, so I'm not even going to get into that. But needless to say, there's opportunities to profit if the markets are open and the options markets are not.
Okay, so last question on this topic before we move on. So crypto being a 24/7, 365 market, do you think that's what's pushing this to follow that? Or is it just, how Robinhood makes money off trades, like them being open longer and makes them more money? Is that more the driver?
Yeah, I think it's just I mean, I don't know what kind of regulations they had to get through to get this. And maybe it's just like crypto becoming more mainstream that has opened up the regulators to be like, well, if like crypto has a path to like being legal, then why shouldn't normal securities get to trade 24 hours too? I think that's probably what they're thinking. And I think these other brokerages just see an opportunity. They love their business is basically made on finding people to pay as much as they can to front run your trades. So like I'm saying, if you don't have to coalesce it with a market price, running overnight is a huge profit center for payment for order flow. And just yeah, anyone that participates in those markets is just making the people that manipulate the markets more powerful. So I would suggest, if possible, that you don't participate. I won't.
Yeah. Okay, so I wanted to update today a story that we've been talking about for a long time now, consumer credit. Um, So with the market hitting all-time highs, all this is happening underneath the surface. We have credit card defaults at record highs since tracking began in 1991, and it's now higher than the 2008 financial crisis. It seemingly, in my mind, cannot end well. I don't see how uh, this ends without some kind of resolution that's painful for some sector or area of the market. Tell me if I'm wrong, but um, what's your thoughts behind the credit card defaults hitting an all-time high now?
What are my thoughts on credit? I mean, part of me says you're correct and someone's going to pay the piper. Another part of me says there might be some kind of especially if it comes to a head before the election, some kind of bailout, debt forgiveness, blah, blah, blah. But yeah, I mean, I think all the following things. I think we're starting to see some softening in consumer spending and expectations around consumer spending stocks, as well as guidance around it. So I think we're starting to see that impact. Whether it's some big catastrophe or not, I think really depends on, a number of things. I think it really depends on the stock market and if it keeps performing and if AI keeps carrying it. Because I think, you know, stocks being up and people having that be profit centers can be very helpful in debt repayment and being able to service the debt. Um, obviously the fact that like delinquencies are going up to such an extent, like that's a reflection of people, not having enough money. Um, but yeah, I would say that there's like kind of two stories here. There's the story of like, I don't know how you can't be concerned about like these numbers. They're mounting and mounting, and they don't seem to be like they're getting to levels that are just highly concerning. And then there's that the market doesn't seem to care about that. Now, I think there's kind of that scary truth that we're starting to see when talk of like universal basic income and stuff like that happens, because I do think what we may see is corporations doing well, automating more things, profits even going up, and individuals suffering, right? And like that will hit consumer spending stocks, but the market might still be, up overall. Or we could see kind of like an even darker accelerated turn where like, oh, what's the response from like, McDonald's for people going less and that hitting profits? Maybe more automation. Maybe these things kind of like feed into each other. But it's going to be very, very interesting. But I do often just like look at the market, right? And say that like, oh, overall the market's like not trading with a ton of concern. It's trading with a little concern over these consumer spending. I've been hitting shorts on consumer spending recently. So there is that. But I've got to think that it's just like election year boom stuff that might be part of why it continues to carry and this AI boom. But like, yeah, we're definitely very concerned. Anything that kind of hurts the AI exuberance could snowball quickly, even with the election year.
So one more story kind of highlighting maybe troubles underneath the surface. We have 41% of Russell 2000 stocks having negative earnings right now. The index has underperformed all basically the other major ones for a while now. If you don't know, for the people that are watching, it's comprised of small cap stocks. So why have they not been able to capitalize like other bigger companies with this AI boom? How come they haven't been able to, see increased earnings automation from that yet? Just why is there such a divergence in what's happening between large and small cap stocks in your mind?
Oh, I mean, I think that's an easy question, right? When you have a company like, typically small caps, they're attractive because of their growth multiples. And when you have Nvidia growing at 231% in a quarter, why the hell would you want to own a company that's like not nearly as profitable or growing as fast? Like, I think that's the problem. Like, this AI boom has shown these like massive growth stocks, and like I would say the sheer size of the growth for a lot of these stocks is staggering relative to the size. And I've never seen, I've said it a bunch of times, like I've never seen a situation like Nvidia happen. So I definitely think that um, that what we're talking about here is, until this slows down a little bit and growth rates like even out on these tech stocks, the AI giants from communications, which by the way, it might not happen anytime soon, then I think we're just not going to see the relative value in the small cap ones. Or what you might have is you might have like names that just kind of light up when they get to certain amounts of profitability. Like they're growing, they're growing, they're growing. And then all of a sudden you're saying like, oh, like this small cap growth has become a value stock. I think until the um until the like AI boom kind of slows down, I think that's what we'll see. And like, if I have a tip, it's like, yeah, check that out. Look in the sector, look at like, forward PE, trailing PE of like, the small caps relative to the more mature companies in their sector, right? And if you see those PEs starting to catch up a little bit, or the forward PE looking like it's going to catch up, that's the kind of small cap that you should be buying, because it's just like, until like this growth slows down, Like, and let's even just pick a number. Until like Nvidia is growing at less than like 100% a quarter, like it just doesn't even make sense to buy a small cap unless it's a value, unless it's really producing good profitability for its growth and relative to its sector.
And I guess that's also kind of why you're saying, like, unless it's a value, when a lot of them are negative earnings, it's tough to really know. Uh, I guess
Yeah.
that,
Yeah, and
yeah.
I mean, like, growth is growth, right? And you want exciting growth, but the other side is like, we don't really know where we are with earnings and like what gets hit, what get hit, sorry, where we are with inflation and rates. And so there's that other side to it where it's just like, okay, not only do we have like these larger companies growing more, we actually see more insulation with profitability if rates don't drop as soon as we'd like them to. So I think that's like that kind of all adds up to not a good setup for small caps, and that's why we've seen it kind of continue on an ongoing basis.
Hmm. We went through our topics, a few minutes quicker today than usual, so I could pause for questions from our chat before we do our switch over. I also, as people may be typing right now, wanted to ask you, so we've rallied very heavily off the April 19th low we saw in the QQQ of 414. Do you think NVIDIA earnings has the power to bring us back there if they're uh, negative enough, or would that be too big of a move for one stock to kind of move us that much? Be almost 10% at this point.
10% for QQQ based on it. I mean, if it's a double miss and they lower guidance, I absolutely think you could see that happen real quick, which is why I'm going to be pretty defensive heading into it. I don't think it's going to be that though, is the other side to it. But yeah, I think this for Nvidia has been carrying the market one way or the other for a bit now on their earnings. But I think this is the highest stakes one because we have started to see some disappointing earnings in AI. We've started to see more softness and you started to see more, is it overvalued? And if they confirm that thesis that it might be overvalued, like it's definitely going to put a hurt on the market.
If Nvidia had that bad of earnings and reacted that negatively, I would feel like SMCI would get crushed, right? 'Cause-
Yeah, yeah. I mean, I was planning on like, yeah, I think they have slightly different businesses, but yeah, I think that like I think if chip demand is down, obviously that's gonna like high performance servers are gonna be something that are also gonna be hurt. But SMC already had their earnings, they already had their guidance. Um, but yeah, I mean, I don't know. I was just thinking that like I was like, could SMCI be down more than Nvidia if Nvidia has a bad report? And I'm thinking maybe it could. Now I'm like reevaluating my whole. Maybe I want Broadcom and Taiwan Semi, but I don't know. Like it's one of those things that's just so hard to forecast. Like I do think it's going to be like gun to my head. I think it's going to be a good earnings report, but it's just too. It's like too tough an event to bet.
Mhm. I just said that because I know SMCI seems to be the most volatile of those stocks. So, but
Yeah,
maybe if it went down that much, it could be a buying opportunity. If it's
no,
just not
you're
even based
right.
off their company. Yeah,
You're right. It's very interesting. I'm gonna think about it all week. Well, I guess I actually only have 2 days.
you have 48
Um,
hours,
is it?
a little bit
It's not.
more.
It's after close, right?
Yeah, yeah, yeah.
Pin Duo is before close, but it's not. Um, I mean before market, but it's not after. But yeah, so I have until Wednesday. Um, all
And we'll
right. Is that
actually
all the
be,
questions?
yeah, with no questions in the chat, and we'll be streaming at 3 p.m. on Wednesday. So our viewers will get your most up to date view then. So
Oh
we'll
yeah,
let everybody know.
you'll see me squirm live
Yeah,
trying to figure out if I made the right pick or not. It'll
yeah.
be fun.
All right, George. Want to do the switch over?
Yeah.
All right, we'll see you on the other side. All right, so just me and you chat now. I will give you guys an update on what we're seeing in the market, with the net option sentiment for the QQQ and the SPY. Let me move this camera a little bit. Hope you enjoyed today's streams and topics. If you did, one last time I'll ask you, be sure to like the video. It's good for the YouTube algorithm. But let me give you an update on the SPY and QQQ net option sentiment. Let's check how the market's actually performing before I do. So the QQQ is up about 0.5%, SPY 0.29%, Dow is basically flat, and the Russell is actually up about 0.5% today. So seeing a little bit of a bounce in the Russell. There you go. But let's look at the QQQ in Prospero. Net option sentiment is at 49 right now after opening today at 46. So we're seeing slight recovery. The highest it's been, it hit 53 in net option sentiment on May 16th. So we'll watch that as we get closer to NVIDIA earnings. And the SPY is currently at 43 and it opened today at 42. And if you guys look in the Prospero app with me, looks like we're actually seeing a bit of a stronger downturn in the net option sentiment for the SPY than the QQQ. The SPY was all the way up to 52 last week. Now it's at 43, and it's actually well underneath the QQQ, which is something I always like to look at. Which one of those is higher in our signals? So that's interesting. Seems like it would lead you to believe that tech stocks of the QQQ are being viewed as more favorable right now than the SPY, which is more value index. I comment right now. I thought that in-depth chat we had on restaurants was kind of interesting today. If you enjoyed that, maybe we'll do more sector deep dives like that.
All the restaurants. Okay. So I am actually just going to do the trading letter today because I feel like I just send too many investing letters for some people's taste.
So George, when I just looked at net option sentiment in Prospero, it seems like the SPY is definitely having a little bit more of like a downward pressure in net options than the QQQ, if you look at the time series graph.
Yeah, I did notice that. It's odd.
Mm-hmm.
Because it was reversed. But yeah, maybe more. It does make a little sense that people are more bullish on tech. But okay, let's get into it. Speaking of which, what did you say for SPY and QQQ?
So the QQQ is at 49 right now, and the SPY is at 45.
All right, what is going on with the sectors? Oh, tech's having a nice day. I don't know. I kind of feel like maybe I should be reading as I write this
in case anyone's just listening. Is anyone out there that listen? I mean, maybe they've stopped listening at this point, but maybe it would be better if I said what I was typing. What do you think, Steven?
Yeah, I think it could kind of guide our viewers. We do post these on Spotify too, so maybe for those people.
I think
By the way, if you're
Spotify is
watching,
the video.
it does also have it. It has both options depending, like if you're online on a phone, if you close your phone. But um, yeah, I think a little narration could only help, really, probably.
Yeah, it's harder but okay. Now we are into the market cap and growth. I'm basically seeing small cap growth came back a little bit, but it's just been so up and down. I don't think we really want to read too far into that. We are seeing, like we saw in tech, large cap growth kind of having, one of the best days, and certainly over the last, like, I would say almost every reading, large cap growth has been doing pretty well. The only other things it hasn't kind of been the champion in are today, where it's just behind small cap growth. The 3-month reading where it's just behind mid cap value, which is a weird thing, and then the 6-month where it's again just behind small cap growth, which is interesting for all the talk of like small caps getting hammered. I guess on a 6-month range, growth stocks are looking good. Although, like, it's a pretty tight margin what we're seeing. We're seeing small cap growth at 18.6 up, small cap value 16.45, mid cap growth 16.37, mid cap value 15.49, large cap growth 18.06, and large cap value 15.71. I think basically what I just said is the large cap growth picture looks very similar, but as in bullish on tech, but I think we still want to avoid concentration risk for NVIDIA, so we're going to stay away from that and do other tech. All right, we're taking a look at our current positions now, seeing if there's anything to exit. Taiwan Semi was one that I thought we would out of, but can you talk to me about the momentum on Taiwan, the net option sentiment momentum on Taiwan Semi?
Yes, so it's actually looking. Wow, it's actually shocking, George. You should actually look at this one yourself. It was at 90, and it's actually now plummeting to 62, and the time series graph looks very like there's about to be a move downward, I would say.
Yeah. Wow. We're bailing on Taiwan Semi. It's kind of funny. That was one of the names I thought I was going to be buying heading into earnings, but nope, we're bailing.
Haley's in the chat right now, just messaging you about your Yankees jersey.
Who?
Haley. I see your AI camera. Is this the original camera?
Yeah, well, I had it turned off AI for a while. Haley knows how disappointed I was in the Knicks loss. No, the Yankees are just on a winning streak, and I'm focusing on what I'm happy about, and not what I'm unhappy about. UNH. I'm unhappy about UNH. It went in the other direction a bit on me. Oh, I gotta stop going into this. I'm just gonna get out of there because it's not the model portfolio. We're doing the model portfolio right now. KKR, I think I'm gonna leave alone. Oh no, JLL shouldn't be in there. I exited all my JLL positions. I'll fix that later. I'm gonna fix it in post. What's going on? Can you talk to me about GE net option sentiment? It was like it was doing so well for us, but not anymore.
GE, yeah, down to 54. It's had a few spikes down to like the high 40s, low 50s recently.
All right, I think. How are industrials? Let me just look at industrials for a second. I haven't even looked at them. Oh, they're having a decent day. Yeah, if they're having a decent day and GE is not. Oh, I might have to get out of PDD. What's going on with the market as a whole? Is it just going down, or Nvidia is doing fine?
Market's up today. QQQ is up 0.5%. SPY a third of a percent. The IWM is actually up, same as the QQQ. Dow is flat.
SMCI is charging back up again. I'm not gonna. I am gonna get rid of GE. All right. JLL shouldn't even be there. Coin. Oh, CB. CB's net option sentiment. Of course, I got it right before the Buffett, right as the Buffett wore off. The Buffett juju. All right, how many do we have here? We have 67. And then how many do we have here? 67? I thought no, Squarespace we need to get the hell out of. Oops. Just do it this way. I'm just getting out of these. Not this. What's going on with NCLH, net option sentiment trend?
Okay, it's at 48 right now, opened at 52. Pretty neutral trend, maybe slight downward.
Oh, Norwegian Cruise Lines. Okay, I'm getting at it. I'm just sticking with my first instinct. I want to trim some shorts. Damn, I'm gonna get out of this. Go has been a big winner for us, but I think I'm sticking in. Let's check out BW. I like BW as a hedge. Yeah, we're keeping it. Albertsons. We got out of that. PCH. All right, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7. Anything. Anything else we miss? I like this as a hedge. What's going on with coals? I think I want to keep coals. Oh, I didn't realize. Calm is going to do this to me again. Are we winning on Calm? I'm not sure I care. I think I might have to just get out of it.
Com is a loss right now.
Okay, I think that's a sufficient number of exits. I want to change up the screener soon. I don't think I'm ready. It's just so second nature for me. Does anyone have screeners they want to see? Anyone in the audience?
Build your own screeners today?
Yeah, I know. I mean, any signals they want to see? No, I mean today I'm doing it, but I'll think about requests for the future. Yeah, meta we really abandoned, but it just hasn't looked as good. Ooh, ASML is a good one.
I was thinking that earlier in the stream. We've talked about Meta less recently.
Yeah, I mean it's down in net option sentiment. It's down. KLAC edges out. Can you tell me about KLAC's net option sentiment trend? It vacillates. Like sometimes it goes real up and down.
It's at 78 right now, which is a new high of the trend. Yeah, it does have spikes lower throughout it, but it's looking like an uptrend right now.
Ooh, GWW. What's going on with GWW?
GWW is at 84, which is a high of the trend, but it's pretty stable.
All right,
Between
how
like
about
75.
TDG?
TDG is at 84 as well. Also a high of the trend, but pretty stable.
How about ETN? I'm gonna get two of them.
What the heck? ETN is also at 84. That's the third in a row. It opened at 72. Not a high of the trend though, but approaching it.
I'll do that. I think SCCO is. What's going on with SCCO? I think I dropped it. I'm stupid to drop it. Last Friday. I think I have two Broadcoms open. How many Microsofts do I have open?
Microsoft, we have I believe just one. Oh no. Yeah, I think just one.
I want to check on CRM and HubSpot. How about the net option sentiment trend on CRM?
CRM is at 78. It's at 76 this morning. Slight uptrend, higher lows. Kind of condensing, a little bit of lower highs going on too, though.
How about HubSpot?
HubSpot is looking a lot better at 96, clear uptrend at the high of the trend.
Interesting. I think I might just add HubSpot right now to my investing portfolio. I like the trend.
Joseph just asked if our metrics update during pre and post market.
No, because the options don't move then, and we do it with the options markets. Just taking a quick stop to add HubSpot to my high conviction portfolio.
I see a new chatter. Hello, Abeliria. They're asking, what do you think about FFIE?
I think it's impossible to predict. I think it's a meme stock, and I think it was like trading at 4 cents a few weeks ago, and that means it's very hard to tell if it's going to head back there, how fast, how to time it. I just think it's a very, very dangerous thing to invest in. And I don't know if you've seen my expanded answer on this, but I'll jump in to give it, where it's just like the issue is that computers, robots, hedge funds, they have way more data, they have better algorithms, faster connections, better execution on trades. Like, because even if you can get all the execution, you can analyze as much social media data as they can, which you can't. Like, even if you traded at the same time as them, you'd still be behind their trade because of payment for order flow, everything that it works. They just get better execution. They have faster internet connections. And even if you create a stop, you could end up exiting behind them, even if you timed it perfectly. And in order to time it perfectly, you have to watch it all the time. Or you might get stopped out at a real bad execution price if it's moving down quickly. And that's if you kind of do everything right. You do everything wrong, you could lose a lot more. So it's just like it's very, very hard to invest in a stock that's just like pure momentum. And you don't like, the only logic is basically that you think other people are going to buy it. And you think other people are going to buy it is a really tough thesis to know when it's over. And it's a really tough thesis to know if there's the difference between a dip or it's about to tank. It's just very, very hard, much harder than investing or trading anything that's based on more logic than just like, this is the meme stock that people are going to buy. All right, we added a lot here. I can't decide on CRM. Do we have any CRMs open?
CRM. We have one. Yes, one.
I'll just leave it then. My little hacky market cap check.
You got a response from Abeliria, George.
What was the response?
I think all we got to do is get the attention of the big boys and the Wall Street bets. To be honest, I've already quadrupled my money, so I'm not worried a bit.
The big boys are already in. That's like, you don't get. You don't get movement like that without the big boys being in.
If someone's quadrupled their money, would you recommend selling half and just letting the rest kind of go so you're risk free at that point?
It's all luck. You're like, yeah, I mean, I would recommend taking gains for sure, or just taking the original amount and letting it ride. But it's luck. It's not skill. And it's just like these are planned, like all of these meme stock things are planned events by institutions. You can see in Prospero, you can see GME, AMC, huge options bets being made prior to the stock going up. I think it's like it is the institutions. Retail is just along for the ride.
I'm not sure if we're supposed to be, if you are supposed to be screen sharing right now or not. I don't know if you know that, but it's just me and you on the screen right now.
I stopped screen sharing to give my. I thought I was. I was just moving numbers around, and I don't know why. Oh, I think. Oh, I know what's going on. What is the best way to do this? I know the best way to do this. I realize that. So close. I'll just hide these today. Make our lives easier. All right, anything I want to do here? I don't think I want any of these. Wendy's are already in. TXG maybe. No. Oh, oops. No, not cold. I think I do actually want. Under Armour. Yeah, what's going on with this? What's going on with the Under Armour net option sentiment trend?
Under Armour is currently at 55, opened at 52, bouncing back and forth between 50 and 60 throughout the trend.
Damn, I should have held ENR heading into today.
Under Armour does have an 83 downside.
I don't like that it's bouncing between 62. That's like
Mm-hmm.
I'm not interested in that. Okay, this will do. Okay. Definitely a bit of a portfolio flip here. Oops. Is there a PBR open?
PBR. Yes. We actually have 2 open.
Okay, then we need not anymore. Oops, that's last year. I'm going to send this at 12:30 to make my own life easier. And then I actually wanted to look to see if I want to add LYB short. SMCI is back in the green. Chubb is screwing me. What happened to PDD today? I should have. Do I want to sell? Do I want to short LYB? I think I do. Okay, any questions? This is a nice little update. I made a lot of little work for myself here. That's why I'm going to send it at exactly 12:30 and make my life easier. Anything else? Nope, I think we're all good. Unless there's any questions.
We have no questions in our chat. I want to say, we have almost 500 viewers today, so thanks to everybody tuning in. We're back normal time Wednesday, 3 p.m. I think everybody's got to tune in for that. It's going to be a big day.
Yep, we'll see. We'll see if I figured out the NVIDIA situation by then.
Yep, I'm sure that's how we'll lead off the show. But until then, thanks everyone. Bye.